Hello and welcome to The Note. There's something a little strange going on in the oil market. We've had the much ballyhooed shale revolution in North America, but yet nobody is really talking about the oil price, and indeed the oil price isn't doing very much. What's going on? With me now to discuss this is our commodities correspondent, Jack Farchy. Jack, thanks very much for joining me once more. Let's start by mapping out that shale revolution. It really is a revolution. It's not overdone by the look of it.
It is indeed, and it continues apace. You can see here this the blue line. We've got the US oil production, and it's increased, as you can see, by well over 2 million barrels a day in the last couple of years. And there's little sign that that's going to reverse anytime soon. From all impressions, it looks like the shale revolution is continuing apace, and you're going to carry on seeing more production from the US and, to a lesser extent, Canada, the red line on the left.
And presumably other people are going to start producing shale as well. The shale isn't endemic to solely endemic to North America.
That's a bigger question, and probably will be quite a lot slower because the conditions were so perfect in terms of the legal the legal underpinning, the industry environment in the US that made it perfect for shale to be developed. That's probably not going to happen nearly so fast anywhere else in the world, but this in itself is a huge supply shock for the oil market.
So when we now take a look at the price of Brent crude, which is basically done in a context of fascinating markets the world over, that is about the most boring flat market you can imagine for 3 years now.
Utterly range bound for 3 years.
No sign at all of a supply shock there, it seems to me.
It doesn't look like it, does it?
Okay, so you're now going to show us with this next chart why that is.
The reason is the supply problems you've had everywhere else in the world, and here's just two examples. There are more. There's Nigeria, other countries in the Middle East, in Africa, but here it is in the story. Iran, Libya. Iran, you've had the sanctions from the US and Europe, obviously, coming on top of a long-term issue in terms of maintaining and increasing production that they've had before the sanctions. Yeah. And in Libya here, you've got the war in 2011, and then recent further civil unrest that has caused production to fall back almost to zero. So between them, you've lost, 1.5 million barrels a day from Iran, and another 1+ million barrels a day from Libya, from the market.
Okay, but particularly given the recent news from Iran, with the dramatic warming of relations there, presumably it's reasonable to expect that red line to go back up to where it used to be, and to a lesser extent similarly with Libya. I mean, can we expect a supply shock from these other places?
Well, that is the thesis that's doing the rounds in the oil market at the moment. It's not going to be easy, and it's not going to happen quickly, but if you listen, for example, to the noises at the OPEC meeting last week, and you should always take these things with a big pinch of salt, but Iran is talking about bringing production next year to 4 million barrels a day. That's all the way up here. Libya thinks, and again, this should be taken with a big pinch of salt, but they were talking about bringing production back to 1.5 million barrels a day by the end of this year. Iraq, currently producing about 3 million barrels a day, also wants to take production to 4 million barrels a day. Not all of this is going to happen.
And shale will, meanwise, continue.
Shale will continue apace. Not all of this is going to happen, but probably some of it will. Iran will take time. The agreement, the recent agreement, isn't going to mean a rapid return for Iranian exports anytime soon, but it's possible and probably likely that you'll see something happening next year that could mean an easing of Iranian exports. Likewise, the Libyan situation is very hard to predict, but it can't be zero forever. There's too much money and too many interests there to say that Libyan production is going to be zero for the foreseeable future.
Okay, so putting this all together, you seem to be making a fairly clear call that oil is about to drop out of its range and drop significantly lower, and that could in turn, as you're lucky enough to be starting as our Moscow correspondent next year, that's a lower oil price might be very good for some people, but for some oil-dependent countries, such as, for example, Russia, this could be very bad news, couldn't it?
Absolutely right. I mean, for all of the big oil producers around the world, and including Iran, which may be one of the causes of it, this is an issue. I wouldn't say, from talking to oil traders around the market, the general consensus is it's not going to fall way out at the bottom of the range, because there continue to be these big problems, and not every one of these supply disruptions will be resolved tomorrow or even in a year's time.
Okay, Jack, thank you very much indeed. Good luck in Moscow. They may not like you too much if some of those forecasts come true. Final picture. One of the things you always have to worry about in markets is when things get a little too quiet. People have got very used to oil trading in a range and not being something to worry about for the last few years. If it does begin to move below that range, that will be a cat among the pigeons. A lot of people are not prepared for that.